Hi everyone, and welcome to this bi-weekly eco investment update for Sunday, November 23rd, 2014. You know, up and away should be the title of this video, because the market just continues to defy everyone's expectations and just keep moving higher, higher, higher. And as if to punctuate the reality of a bull market with still incredible life in it, we had like spanning back from last Thursday maybe, we had about 5 days of kind of dull action of down 11 points, maybe up 2 points. And then Friday, we once again exploded, you know, up 100 points and closed at a new all-time high. Ho hum, right? A lot of people wrote me over the last 2 weeks about the eco investment updates, and I have a lot of people that watch them now because A, I keep my message very simple. You know, the only thing that kills a bull market is rising interest rates. Okay, sometimes we go from green to yellow caution, which we did a couple months ago in September, but things have been all green for the last month, and the markets once again moved up 400 points from where we rebought again. And we are on our way. The reality is that I believe the reason that so many people get caught up and get caught short when it's time to make money in a market is they've never seen something like that before. They hear the old adages: bulls make money, bears make money, but pigs get slaughtered. In other words, you know, everybody that buys and then it gets greedy and keep buying, sooner or later they're gonna buy at the top and they're gonna meet their doom. Well, the reality is that the people that think like that are the people that end up sitting on the sidelines begging for a chance to buy or invest, and a chance that never comes. There's so many negative Nellies out there that can find 1,001 reasons why the market should be on its head instead of reaching new all-time highs. You know, what's going on in Russia now with the ruble and the free fall, and Putin on the march, in Ukraine, and there's just all these things, student loan debt, and you know, people militarized it, union militarization at Walmart and things for the season. I mean, there's just a plethora of bad news, but one old saying still holds true, and that's this: a bull market climbs a wall of worry. Okay? In other words, the worse the headlines are, the better the market tends to behave. Then when you finally reach the point where, man, everything's great, the economy's rolling along, and everybody's feeling wonderful, then it's like, wow, what happened to the market? It suddenly took a steep dive and a collapse. Well, the other reality is that markets look ahead, and today's newscasters and financial talking heads, they see today's market action. They have to talk about today's market action. But in reality, what you're seeing today often leads what the economy will be doing in 6 months. So a lot of people get caught up in taking the current opinion of what today's action is and then buying or selling accordingly. You know, General Ford announces their new F-150 aluminum body, where everybody rushes in to buy. Well, that news came out months ago. It started to leak out. Okay, so you know, you're behind the curve, even though you think that you're right there, or the labor market's weakened dramatically. Oh, we better sell stocks, and then later in the day, the market's up 200-300 points. The market is a better forecaster of the economy than individual people are. And that's the reality of it, because the market mind is a conglomeration of millions and millions of views taken together and put into a blender and spilling out, and that's what kind of makes it unpredictable for people. So you got to go in with a simple thesis, which I do. I don't sit here and overanalyze stuff and, well, this week we're going to buy and this week we're going to sell, and gee, the market should crash now, so woe and be gone, everybody, you know, head for the hills and things. I believe in the slow, methodical sort of approach to things that says you have that thesis in your mind, which we've had for over a year on these uploads on various channels that people have followed me, because we started these last October, and the messages run clear week in, week out. Only one time we've gone from a red to a yellow light, and then we went from green to a yellow, and then we went back to a green. The message is simple. In a world that does not have a lot of opportunities for making money, the stock market right now is the only game in town. If you want to buy a real piece of real estate, forget the 10% down, the 20%. You almost have to have 25% now down to make that happen. Okay? That's the reality of why the real estate market is really not firing on all cylinders right now. But the stock market is. And things that rise tend to attract more and more demand. I mean, it's the opposite of the real world. One of the real conundrums of the stock market is this. In the rest of the world, when things go up in price, what happens? People buy less of it. You know, if a pound of beef goes from $4.99 to $8.99 a pound, you can bet there's a significant decrease in demand for beef. If a Big Mac was to go from $2.99 to $6.99, there would be a significant decrease in demand. But what happens when you talk about investments, stocks, gold, silver, things like that? The reality is the higher that they go, the more demand comes in. And therein lies the downfall of the average investor. I don't know about you, it's a seasonally strong time of year now into the Christmas season. Pretty soon some people will be talking about the Santa Claus rally and the year-end rally, and then the New Year's money will come rushing in January. It's all something that you want to be a part of, and it makes an even stronger case for why I remain bullish on stocks and so on the economy. It's the only game in town. Thanks so much for watching, and I will see you in 2 weeks for the next Eco Investment Update.